Today, we are examining a new Iraqi banking-related claim that is attracting attention among Iraqi Dinar followers. The discussion centers on liquidity in the market, demand for high-denomination 3-0 banknotes, possible changes in the circulation of lower denominations, and the broader question of whether Iraq is moving toward a more internationally integrated currency and banking system. The information we are analyzing comes from an Iraqi banking source and should be viewed as commentary rather than confirmation of a formal currency policy. That distinction is extremely important because statements about currency denominations, exchange rates, or a potential revaluation can generate significant expectations. Until the Central Bank of Iraq, the Iraqi government, or another official monetary authority publishes a formal decision, these claims should not be interpreted as confirmation that a new exchange rate has already been approved. The central point in this update is the reported shortage of liquidity in certain parts of the market and the resulting demand for 3-0 notes. The source argues that demand for these larger denominations is changing and suggests that 2-0 notes could become increasingly important, followed eventually by 1-0 notes and then lower denominations. At first glance, this may sound like a direct signal that the Iraqi dinar is about to experience a major increase in value. However, the economic reality is more complicated. Changes in the denominations people use can result from several different factors, including inflation, changes in cash usage, banking sector reforms, transaction requirements, currency distribution, and changes in the purchasing power of the currency. Therefore, increased demand for particular notes does not automatically prove that the exchange rate is being changed. The phrase 3-0 notes generally refers to Iraq's large denomination banknotes, such as the 10,000, 25,000, and 50,000 dinar notes. These notes have been a major part of Iraq's cash economy for years. If market participants begin using smaller denominations more frequently, that could reflect a change in how cash transactions are being conducted. But again, the reason behind that change matters. The source also says that the rate is going in the right direction and that the currency is gaining value every day. This is where viewers need to separate market interpretation from verified exchange rate data. The Iraqi dinar does not simply gain value because a particular denomination becomes more or less common. Exchange rate movements are determined through monetary policy, foreign exchange conditions, reserves, fiscal policy, supply and demand, and the framework used by the Central Bank of Iraq. So if we are looking at this development from a financial news perspective, the more important question is not whether a certain banknote is becoming popular. The bigger question is whether Iraq is making measurable progress toward a stronger and more efficient monetary and banking system. That is a much more meaningful indicator for the long-term outlook of the Iraqi dinar. A modern currency system requires more than changing the physical notes people carry in their wallets. It requires strong banks, reliable payment infrastructure, effective monetary policy, transparent financial regulation, international compliance, and confidence in the domestic banking system. Iraq has been working for years on banking sector modernization and improving its financial connections with the international system. This is also why the source's statement that Iraq is geared up to go international deserves careful attention. Greater international integration would be economically significant if supported by official measures. International banking relationships can improve payment efficiency, trade settlement, investment flows, and confidence in the financial system. But international integration does not automatically mean that the dinar will suddenly receive a dramatically higher exchange rate. Another important part of the statement is the reference to RE and RD. In dinar-related discussions, these terms are often used to describe revaluation and redenomination. These are two very different concepts. A revaluation involves changing the exchange value of a currency relative to other currencies. A redenomination, by contrast, involves changing the numerical units of the currency, often by removing zeros. If a country redenominates its currency, the number printed on banknotes may change while the underlying purchasing power is adjusted proportionally. Removing zeros by itself does not make citizens wealthier. That distinction is essential for anyone following Iraqi currency developments. Suppose, for example, a country removes 3 zeros from its currency. A 25,000 unit banknote could theoretically become a 25-unit note under a redenomination framework, with prices and accounting values adjusted accordingly. That would be an administrative and monetary reform, not necessarily a sudden creation of wealth. The actual economic impact would depend on how the conversion is structured and implemented. Therefore, the statement that lower denominations are coming should not automatically be interpreted as proof that a revaluation or redenomination has already been approved. The Central Bank of Iraq would need to communicate the details of any such monetary reform, including the timetable, conversion rules, legal framework, security features, and treatment of existing notes. For Iraqi Dinar followers, the short-term implication of this update is therefore more about monitoring liquidity and banking developments than expecting an immediate dramatic exchange rate change. If there really is increasing demand for particular denominations, that could indicate changing cash flow patterns inside the Iraqi economy. Banks, businesses, and consumers may be adjusting the way they conduct transactions. That is worth watching because currency circulation can provide information about economic behavior. At the same time, viewers should be cautious about interpreting every change in cash demand as an exchange rate signal. A shortage of one denomination can occur for operational reasons. Banks may need to redistribute notes. Businesses may require different denominations for transactions. Cash can move between regions. Seasonal demand can also influence circulation. In the longer term, however, successful banking reforms could have much greater significance for the Iraqi dinar. If Iraq continues improving financial transparency, strengthens its banking institutions, expands electronic payments, modernizes financial infrastructure, and increases international connectivity, the overall monetary environment could become more efficient and credible. A stronger banking sector can also help reduce excessive dependence on physical cash and make economic activity easier to monitor and manage. For the dinar, that kind of structural progress matters far more than speculations surrounding a specific banknote. Another issue worth watching is confidence. A currency works best when households and businesses trust the financial system behind it. If more economic activity moves through regulated banks rather than remaining entirely outside the formal banking sector, policymakers gain better visibility into financial flows. Banks can also play a larger role in supporting businesses, investment, trade, and domestic economic growth. That does not guarantee a particular exchange rate, but it can contribute to a healthier monetary environment over time. The statement that every day our currency is gaining value should therefore be approached carefully. Currency strength should be measured using actual exchange rate data, not simply by looking at the denominations circulating in the economy. The Iraqi dinar's official exchange rate framework remains the critical reference point, and any major change would need to be confirmed through official channels. For viewers following the Iraqi dinar, the responsible approach is to watch several indicators together. Look at official Central Bank of Iraq announcements, monetary policy decisions, foreign exchange market developments, banking reforms, international financial compliance, government fiscal policy, inflation trends, and Iraq's foreign exchange reserves. When these indicators move in a consistent direction, they provide a much stronger picture than isolated claims from unofficial sources. So, what should we take away from this particular update? The most interesting element is the discussion about changing demand for different denominations and the broader claim that Iraq is preparing for greater international financial integration. If confirmed developments support those claims, they could represent another step in Iraq's long-term effort to modernize its monetary and banking system. But there is currently an important difference between saying that reforms are progressing and saying that a specific revaluation or redenomination is imminent. Those are not the same thing. A responsible financial analysis must leave room for uncertainty. Currency reforms can take time, and policymakers can change their plans depending on economic conditions. Even when a country introduces new banknotes or removes zeros, the process can be carefully managed over an extended period. That is why Iraqi dinar followers should focus on verified developments rather than fixed expectations about a specific future rate. The long-term story remains centered on Iraq's economic fundamentals. Iraq has substantial natural resources, a large domestic market, and significant potential for investment and economic diversification. But transforming that potential into sustained currency and financial strength requires institutional reforms, fiscal discipline, banking modernization, private sector development, and continued integration with the global financial system. If those reforms advance successfully, they could strengthen the foundation supporting the Iraqi economy. Whether that ultimately results in a different exchange rate regime, a redenomination, or simply a more efficient existing monetary framework is a decision that must come from Iraq's official institutions. For now, the latest banking commentary is best understood as an indication of how some market participants interpret current liquidity and denomination trends, not as official confirmation of a coming currency reset. We will continue watching the Central Bank of Iraq, the Iraqi banking sector, and broader economic developments for verifiable information. The key message today is simple. Changes in banknote demand can be interesting, but the real story is the underlying economic and financial reform taking place across Iraq. If official authorities announce a new currency policy, a new denomination structure, or a change to the exchange rate framework, that announcement will be the information that matters most. Until then, stay informed, remain cautious with unverified currency claims, and focus on facts rather than guaranteed predictions. Make sure to subscribe to Iraqi Dinar News and like this video for responsible and factual updates on the Iraqi dinar and Iraq's economy. This content is provided for informational and educational purposes only and is not financial advice. Always conduct your own research and consult a qualified financial professional before making financial decisions.